So I've just taken one trade on my brand new 100k Alpha Capital challenge, purchased this through prop firm match, and in this video I'm going to be describing my whole prop firm approach, how I'm going to be going about it from a mathematical standpoint as opposed to a trading standpoint, because very often, a lot of the time when people come into challenges, they're focusing it from a trading aspect rather than looking at the raw mathematical side of it. And I think when you look at the numbers and you really understand your numbers, you really detach from P&L and you really focus on money in, money out, and actually passing these challenges. So I used prop firm match to purchase this challenge, got 30% off on Alpha Capital's offer that they were running. And what I'm going to do is actually throw this account into the analytics section of prop firm match. This is really one of the good features about prop firm match, is you can really track your return on investment, basically your money in and money out. And that's exactly what I've been doing. Obviously I've had this FTMO account in here that I've showed in previous videos, but now I'm going to go ahead and add the Alpha account. So Alpha Capital, this was purchased on the 20th of March as a two-step. The account was a 100k. I can't remember how much exactly it cost me. I think it was about 290 US, give or take. And then I'm going to go ahead and add that challenge. And what that's going to do is it's going to change my total investment and then my total ROI as well. Obviously, this challenge is in progress. It's a brand new account. And yeah, I've taken one trade on it, which I'll explain really, really quickly before we jump into the mathematical side on my approach to this challenge. So it's Friday, the 27th of March, and I was looking for EU longs this morning, looking to play TGIF, whatever you want to call it. Price action has been a little bit funky this week. We've basically remained within this Monday range. So Monday created a low and a high, just basically off that news on war, basically, the ongoing Iran situation. And yeah, we've been trading a little bit gingerly, I guess, around this Monday high and low. So I was really just trying to play a range bound market here, trading ping pong basically, and I was trying to buy essentially back up to these previous highs. Again, like I said, just playing that range bound market, playing out of this higher time frame POI, and yeah, back up towards these kind of Asia highs. But obviously we didn't really see any follow through, and so I had a manual close on this one, quick manual close. Again, for me, just based on experience, if a trade doesn't really go in the first 15 minutes, then it's very unlikely that I'm going to see follow through. So I'd rather just cut the trade, have a small loss, and actually increase my average risk to reward and my average win to loss ratio. So that was a trade. I did miss the re-entry around New York as I was out, but that's fine, is what it is. So now let's go ahead and jump into the actual mathematical side of things using Claude AI. All right, so what I've actually done with Claude is I have thrown in all of my live data. So this is not back-tested data. This is real live trades that I've taken on my personal account, fully verifiable with a track record, and actually plugged in the data and basically gone to Claude like, give me the best, most optimal prop firm approach and, the expectations of passing, the average time to pass, and all of this jargon. So what Claude's actually spat out is this really, really good dashboard. We'll kind of go ahead over all of it and kind of explain my thought process and, its findings. So Claude has essentially spat out the best risk level of 0.75%. Now, this is obviously the most optimal in terms of pass rate. So what Claude was looking at was the highest potential pass rate and actually deciding risk based on that. Now, there are obviously two schools of thought when it comes to prop firm challenges. It's either you want to almost guarantee yourself a pass because you don't have the capital to fund, or you want to increase your time to pass because you have, or decrease the time to pass, because you have the capital to invest. And so I guess I sit in the kind of 50-50 category of that. So I like to have a bit of both. I like to have a high pass rate, but I don't like to be in a challenge for too long. So when we look at this simulator phase right here, my main approach when it comes to challenges is around 1.5% risk. Now, again, what this allows me to do is have a pretty high combined pass rate. So here, about 76% combined pass rate of phase 1 and phase 2, with a relatively medium term time to pass, so about 3 months. The worst 10% is about 6.3 months, and the best 10% is about 1.3 months. So I'm okay with taking 3-4 months to pass a funding challenge, given the fact that I've got a pretty decent pass rate of around 76%. And you can see, again, time to pass varies based on the risk that you take. So again, here is 1.5%. On average is 2.9 months with a 24 trade average. Obviously, you see a lot of people trading around 2.5% or 3% risk, where they're able to pass these challenges within the month or even, under a month, which is fine. There's different approaches for different people, different approaches for different risk appetites and all this good stuff. So what Claude is then allow me to do is to put this into an ROI and cost calculator. So when I'm looking at the 1.5% risk, I can see that on average, it's going to take me 1.3 attempts to pass a challenge. The average spend is going to be about 768 US, with a monthly payout of potentially $3,000. Now, obviously, this is an average. This is, not going to be every month, and this is going to be varying pretty substantially as well. So then when we look at the risk profiles, again, consecutive losses, you can see 1.5% is going to bust at some point. Based on the live data that I've given it, it would have busted in January, which again is fine. I'm not really too fussed about that. And then the risk profiles, it basically gives me a whole risk profile comparison, breaking down 0.5%, 0.75, 1.2, and 2% risk as well, giving me the recommended of 0.75%. So if you've not done this already, I would highly recommend throwing all of your data in, whether that's live or whether that's back tested. Throw it into Claude, ask him to create you the most optimal prop firm approach, give you all the data so you can look at it from a mathematical standpoint and not just look at it from, losing 1K on a trade, losing 2K on a trade. You can actually look at it from what are the statistics of this? What can I reasonably expect from this? And how to look at it from an actual business aspect, as opposed to, becoming emotionally attached to these trades that you're taking and the outcomes of those trades. So I'd highly recommend you do this data, throw it all in, see what it spits out. Let me know in the comments what it does for you. I'll be curious to know everyone's thoughts on this, and I'll see you soon.